December 2017, question number 2, boy, are we there? December 2017, question number 2, boy, are we there? December 2017, question number 2, boy. December 2017, question number 2, boy, are we there? Great. So here we are. On 1st January 2014, R Limited promised to pay its 200 employees a bonus in what? I love this. It's a cash-based award scheme. 200 employees, a bonus in cash that would be based on how the company's share performed on the securities exchange. The bonus was to be paid on 31st December 2016, as long as the market price of the company's share was what year? 55 and above. 55 and above. And the employee was still working for the company. As at 1st January 2014, the market price of the share was 50. And the par value of one share was 10. The bonus was to be equivalent of what year, somebody? 100 shares. All right. All right. So the most important thing that I would want you guys to tell me is the vesting period. The vesting period. How many years are we looking at? How many years must you wear this vest for us to be able to say, fine, now you qualify? The vesting period, how many years do we have here, somebody? Great. Now, the other thing that I know, ladies and gentlemen, 3 years, yes. The other thing that I know, we have the grant date. The grant date is 1st January 2014, but this being a cash-based, listen, this being a cash-based payment, a cash-based share payment, the fair value on the grant date, the fair value on the grant date is irrelevant. This fair value, this market price, this one as at 1st January 2014, the market price of the share was 50. This one, if I were you, I would delete this figure very fast. I'll just say they are irrelevant. Irrelevant. So then let us straight away start accounting for our cash-based. Cash-based, this column now becomes what here? Very relevant. So if it's cash-based, the column here becomes very relevant. This column. If it's cash-based, we shall be using the market prices of shares available at the end of each year, at the end of each year. And really that is a distinguishing feature. 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 That is the distinguishing feature between cash-based and equity-based. Great. So what do we have here? Very easy. So we have our years. We have our years. Our years, ladies and gentlemen, we have 2014, 2014, 2015. So 2014, 2015, and then we have 2016. So this is the year. Then we have the accumulated expense, accumulated expense, accumulated expense. And then we have, in this case here, the annual expense. So we have here the annual expense. We have the annual expense. We have the annual expense. We have the annual expense. So, ladies and gentlemen, this is quite a straightforward question as well. So please let me know whether you've been able to put down your table down. Do you have your table down? Carol tells me yes. Carol tells me yes, and Carol would want to see you writing your name, starting with what here? A capital letter. You're a big person. Big person. Don't write your name with a small c. With a small c. We shall overcome. Great. Thank you very much. So tell me, how many employees did we give this grant? Yes. So employees in this case here were granted this award were 200. That was at the beginning of 2014. But you see, in 2014, we are going to lose some. In 2014, we are going to lose some employees. How many are we going to lose in 2014? It's not all of them who will be able to wear this vest by end of the year. So they're telling me, Mwalimu, you know what? 10 will disappear. 10 will disappear. You can see number of employees leaving. 10 will go. 10 will go. So then what do we have here? In 2014, we have 20. 200 I mean minus 10. right? How about 2015 employees? 2015 employees will be how many? 2015, I'll talk of 190 they brought forward minus the number of employees who will leave in 2015. 2015, ladies and gentlemen, 2015, the number of employees who will be leaving, we are told they will be 15. They will be 15. Number of employees to leave will be 15. 15. So come here to 2016. 2016, what are we talking about here, somebody? 2016 balance brought forward is 175 minus what here, somebody? How many will be leaving in 2016, I mean? How many? 15 again, 15 again. The moment I've been able to account for these employees, then everybody, ladies and gentlemen, will be very happy. Everybody here will be very happy because now everything will be easy. So do we know in this case here the number of shares we are granting each? The number of shares we are granting each, number of shares we are granting each. So times 100, times 100, times 100. So in this case here, this one here, you know, we are giving them money equivalent, right? So do we have in this case here the fair value of 2014? Do we have the fair value? Remember this cash-based. For cash-based, we go for fair value of these shares for each of the years, for each of the years, for each of the years. For cash-based, we go for the value of these shares for each of the years. So we have here 55. Thank you very much. In 2015, we have 58, 58, 58. In 2016, we have 60. And then now you recognize the fractions now. So you recognize the fractions. You recognize the fractions for purpose of accumulation. We recognize the fractions. We recognize the fractions. We recognize the fractions. So remember, these guys here will have stayed with us for 1 year out of 3. These guys would have stayed with us for 2 years out of 3. These guys here would have stayed with us for 3 years out of 3. Hooray! So then could you kindly give me these figures very fast? Kindly give me these figures very fast. The first one, I'm being given 348, 333, 348, 3333, like that. How about the second year? The second, I can see a question there. How about the second year? The second year, how did we? There's a question on me. How do you get the 100, Catherine? Catherine, the 100 is given. The 100 is given somewhere here. Thank you for asking. That the bonus was to be the equivalent of 100 what year? Shares. The bonus was to be equivalent of 100 shares. Of 100 shares. Thank you so much. So please let's go back a little bit. Remind me the figure that we got here. Remind me the figure that we got here. Remind me the figure that we got here. So we have 676, 67, 676, 667. Great. The last one is 900,000. Is it 900,000 or 960,000? It's 960,000. And then now we have the increases. We take them to the P&L. Remember, these will go to the statement of financial position. So the increases, we take them to the P&L. The increases, we take them to the P&L. So like the first one, of course, will be 348, 333. And then the second one, the increase. So the increase, 328, 328, 328, 3333, 328, 3333. And then, ladies and gentlemen, the last one is the increase there. The last one is the increase there, which is the 283, 334. 283, 3334, like that. Ladies and gentlemen, remember this is helicopter revision. Helicopter revision is all about what here? Low-hanging fruits. So the moment I reach here, I'm so sure you guys will be able to get 3/4 of the marks, or even all the marks, Now, once I reach here, I'll go straight out to the next question. Great. Thank you very much. So, and again, this video will be sent to you through Vimeo, but unfortunately, most of you guys are not 283, 333. Let us not fight over the 1 shilling. Let's not fight over the 1 shilling. Let's not fight over the 1 shilling. So as I'm explaining here, this video will be sent to you through Vimeo or through YouTube, right? So I expect you guys, whenever you watch my videos, to show appreciation. Just say a like there, isn't it? Right? Right? And if it's YouTube, share them with your friends. If it's YouTube, it's free. If it's YouTube, it's free. Share them. Put a comment down there. You need to know how to promote your Mwalimu to the international status. International status. Yeah, international status, yes. Like and subscribe, yes. international status. This mwalimu should not be teaching only Kenyans. Should not only be teaching Kenyans only. Great, 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 great.